What's up, guys? Jacob Barnhill with the Barnhill Team at eXp Realty. Today, I want to give you guys an insight into the actual market here in Columbia, South Carolina. So I've got a couple things pulled up that I want to share with you guys. And one of the numbers I'm going to share with you is the median sales price. And the reason I like the median sales price, especially right now, more than the average, is because we have these large swings. So median, if you remember math from high school and middle school, is more of that middle number, right? When we have properties that are now selling more homes that are selling over $300,000, but we still have these ones that are selling under $100,000. Our market wasn't like that before, and it might have been a little bit better to run average at that time, but still I probably would have liked median because it gives us more of an accurate picture of that middle number rather than just the average, right? So for example, just last month alone for November, today's date is, that was for October rather. It is November 7th today that I'm doing this video, 2022, and our average price for the month of October 2022 was $310,879. So that's high. If you remember, not too long ago, just a few years ago, not even a decade ago, we were nowhere near that. I mean, we pretty much doubled in just less than the last decade. So then the median price was $270,000. So that gives us a little bit more of that median number. Our average days on market is 26. This was just for that month. And we had about 1,256 in residential homes that sold that month. Last year at that time, we had about the same. And that's peculiar because it's like, well, aren't things changing? Well, they actually very much are. When we start to look at the inventory that was available last year, it was far different. Just this last year, we were probably close to 800-900 homes that were available for sale. We're just over 2,000 homes that are for sale now. So we're having this deceleration in pricing. What that means is prices were going up and up and up like this, but now they're starting to increase still, but they're not increasing at the rate. They're actually decelerating. So we're not actually going down in prices yet. We're just seeing a deceleration still in that pricing. Luckily, Columbia usually doesn't see as hard of a hit. We are a much more stable market. I think it's due to the fact that we have very stable industries. We're military, we're education, things like that, right? We have a lot of stable industries in our market. Also, we're still one of the cheapest places to live. So we have, if you guys can't tell, you look at traffic around town, we have a lot of people around here that didn't used to be around here. Lake Murray's not the same. Malfunction Junction is definitely not the same. It's worse. There's a lot of things that are attracting people here. We're very centrally located. Even the last market correction, we did not feel it nearly as bad as many other markets around the country. So that's a good thing. Hopefully that gives you some hope to a lot of sellers out there and to buyers, right? I think that when we're looking at a market like this, there are a lot of unknowns. It's hard to figure out sometimes when to sell. And I've got a lot of other videos to give you guys some insight into some of those. So real quick, I want to share some other numbers that came out from our MLS listing service. There was some quick facts I wanted to share with you guys. So the price range that had the strongest sales was actually over 300,000 and above. There's a 27.3% increase. Bedroom count with the strongest sales was 2 bedrooms or less. Those are actually down about 1%. So I think people before were trying to get really creative with places that they wanted to live, and now they're not having to get as creative because we're having more inventory start to stick around on the market. So 1 year change in closed sales. So we're seeing less homes closing. We're still seeing plenty that are coming to the market and sticking around. So we have negative 20.4% 1 year change in closed sales, right? So we're having less homes that are actually closing, less that are actually closing that are coming on the market. We have more that are sticking around. We have a 15.5% 1-year change in median sales price. So again, we're still seeing prices go up. It is changing though. We're in the middle of this change as we speak. And then almost a 40% 1-year change in inventory, right? So we have a lot of extra homes that are sticking around. What does this do for a seller? Well, it may be a little bit more difficult to sell homes. We are seeing less showings, we're seeing less offers, and we're seeing increased days on the market. We're seeing that in the MLS data, and we're seeing that with our listings as well. And it's going to take a lot more of those active strategies to actively sell your property like our team normally does, right? And we're going to see more people withdraw and expire. Agents just can't put a property in the MLS and it's going to sell. Those active strategies, those old school skill-based things that newer agents don't, some of them don't know how to do, are going to start causing some problems. So be careful who you hire to help you sell your home. Now, on the buy side, right? What does all this mean? Well, obviously, you guys know the interest rates have gone up. We've seen a dip in them recently, right? I was just talking with our preferred lender last week, and we still may see some up and down fluctuations with all of that stuff to come. But here's what I want to say to the buyers out there. Marry the house, date the rate. I'll say it again. Marry the house, date the rate. We don't know what's going to happen later, but you can always refinance. Here's what I mean and how that can make sense. If you're in competition, if you're going to wait till a lot of people start coming active again in the springtime, or you're going to wait and try to get in these homes in the wintertime, right? And you're gonna fight for a little bit less inventory. So there's going to be more demand on these homes in the wintertime, right? And you're going to pay more for these properties at these times, likely, because you're going to be in a little bit more competition for the best homes. And if you did the opposite, as Warren Buffett would say, if you did the opposite of what most people would do, even though there's higher interest rates right now, you likely may save a lot of money by paying a higher interest rate for the time being and refinancing later. That will come at a cost, but it's going to be far less than a lot of times what we have to do to buy the best homes and pay for more than the home, or we're not able to work as good of a deal and get good terms for you, or get some extra closing costs and things like that, right? We can negotiate a lot better deals. I just had one that I negotiated with our buyer, and we had $50,000 off the list price. $50,000, right? So that's an extreme scenario, but in the right moments, we can capitalize on the things when we don't do what most people are doing, and we marry the house and we date the rate. Okay, so hopefully that was some good tips for you guys. We're also working with a lot of investors right now. You still need to buy at good prices though. So don't just buy any deal. I know a lot of flippers that are friends across the country, and they're tailoring back and only buying a lot of the best deals right now. So you still got to be smart. Anybody that's looking for short-term rentals, there's a few things that are doing regulation changes around town you just want to be aware of, but still some amazing deals you can just pluck right off the MLS if you're looking for income properties, cash flowing investment properties. So we have a lot of different resources for you guys. You know how to get a hold of us. If you guys want a tailored plan and you want some more information, reach out to us. We can help you guys. I look forward to hearing from you, and stay savvy. Thanks, guys. Bye.
Hey guys, it's Jacob Barnhill. I just wanted to hop in real quick and ask you guys to do me a huge favor. If you guys like these videos and more people can see this stuff, you can hit the like button and share it. That would be great. Also, subscribe to the channel so you get more notifications so you can check this stuff out in the future if you liked what you see here. Also, there's going to be a bunch of links below if you want to go check out our workshops, our events. We're doing stuff for investors, agents alike. We're doing tons of stuff. If you guys are interested in a career, working with us in another way, I have all the links to our websites below. Click those. Love the help. I appreciate it. We'll see you guys on the next video. Peace out.